What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Monday, April 1st. Okay, guys, Nvidia stock here on Thursday, the last trading day of the week, finished up $1.06 per share, plus 0.12%. But while not an incredibly volatile day to finish out the week here, today was a very big day. I'm going to take you through why. Let's go through and try to pull out as much bias as we possibly can out of a variety of data sources, the volume profile, the psychological levels, the expected move, right? The options bias, areas of elevated volume for traders to expect come next week. Let's take a look. Let's start with our volume profile analysis here on the 5-minute chart. Things might look a little different here today. Let's do it. So the moves that I'm primarily interested in here from Thursday. This quick drop and pop off the open, okay? This test, that's going to be a really big deal. That test, I want to take a look at that. And honestly, guys, that's really it. All right, let's take a peek. So we got a rather contextual first bar, a bit higher volume than average, right? We expect that opening bar to be a little bit higher volume. These three bars, these three green bars, and then you start to see the fade and the fade in volume really quick. This ascending volume that actually exceeds the opening bar at the peak, that's a rather heavy bullish bias, right? You know, it's not extremely heavy. I shouldn't say that. Extremely heavy would be 1.5 million for 6 bars in a row. But that's a relatively, obvious bullish bias that goes along with that price action, which, by the way, a lot of people assume that that's obviously the case. It's actually commonly not the case. It's actually pretty common that you see big moves that have almost no bias in the volume profile, or a little less common, or you can see a bullish move or a bearish move with the actual opposite bias in the volume profile, and simply by looking at the price action, you would have no idea. You can't ignore it. Now, this test, okay, what we're really looking at is that wick that came down and tested that $900 a share level. The low of that candle was $900.12. All right. As we know, 900 is a huge level. We'll talk about that a little more on the daily, but in the volume profile, notice how this candle has a big wick on the bottom, right? We saw a little bit of elevated volume on that bar, right? That was, really the highest volume that we saw for the remainder of the day until we got, I suppose after the close. It's close, but after the close it looks like. Which, by the way, if you're curious, we can just ignore this bar here, because that's very often just going to be rebalancing right after the closing bell, and you can see it very rarely leads to any real movement. But this bar here, we saw a little bit of elevated volume. Now notice that wick on the test, right? That tells me that was a battle bar. So we see a little bit of elevated volume. Yes, it happens to be red, but with that wick, that tells us that there was a substantial amount of buying volume as well within that red candle, which tends to pump up the volume a little bit. Now again, it's not 4 million shares on one bar, but it's higher than the surrounding bars. That's due to that being a test of $900 a share. And there's a big wick, and it held. It's a really big deal. Now listen, it wasn't the strongest hold in the world. I mean, the stock closed at 903.56, so it was a hold. But it was a little bit of a sad hold heading into a long weekend. I would have loved to see this thing punch up to 930, but who wouldn't as a bull? It held today, and that's what really matters. Let's move on here to the 30-minute chart and take a look at the psychological levels, because this is very interesting here today on the 30-minute. Notice how this 50 period actually acted. Now, I know a lot of you might not have seen this today. Some of you that pay attention to the 30-minute, which is a very psychological chart, by the way, I think you should pay attention to it. You're like, yep, I watched that all day. I took some trades off of it. Good for you. But for those of you who are just seeing this for the first time, that's okay. Now you know, right? That 50 period was a huge player today. It held that stock down as the 50 period was descending throughout the day. Guys, come Monday, I want to see Nvidia get above and treat that 50 period as support. That's all. I don't mean for 3 seconds. I don't mean for 6 minutes. I mean I want to see it rip up, retest the level on lower volume, whether this is in pre-market, ideally intraday on the retest, okay? Because then on the pull away, I want to see as much volume as possible to really confirm That opens up a move up toward that 200 period on the 30-minute. Okay, I just want to see this resistance trend here today. I just want to see that gotten rid of come Monday. Whereas, for you bears, that's a good thing to see. If you guys can maintain that 50 period as a resistance level, it's going to drag the stock below $900 on Monday. If you're able to maintain that, right? That's the kicker. So, bears, you want to see that maintained. Let's move on to the 4-hour chart. A similar deal here on the 4-hour. You notice that Nvidia is struggling with just psychological, these. I know. A lot of you guys are like, moving averages. This is so dumb. Well, people pay attention to them, right? I'm not here to say if they're dumb or great. I just know that they're self-fulfilling prophecies. So to me, it doesn't matter. All I care about is that there's eyeballs on them, and those eyeballs are making decisions based around those levels. So I have to pay attention to them, otherwise I'm in the dark. But Nvidia's struggling here on the 4-hour as well to reclaim, at least today, Thursday, that 50 period. That's a really great scenario. On the 4-hour now specifically, which would include the 30-minute by default come Monday, would just be use 900 as kind of a trampoline to rip up and get up through that 50 period, which is currently sitting at only about 910, and reclaim the 50 period on the 4-hour as support. That's another psychological barrier in between the stock price and 900, which is like the real story, right? I want barriers in between. If you're a bear, it might be difficult to drag that 50 period down beneath 900 come Monday because it's a slower moving average, but at least you can get the 50 period on the 30-minute down as a psychological barrier as long as you can hold that as resistance. Now, the real story. All right, this is the biggest story on the daily chart. Let's take a quick peek. Guys, Monday, you guys know what I'm going to say, don't you? Monday is the battle of $900 a share. Yeah, we held it today. But let's be real, the stock's at 903.50. It's not at 950. 900 is as in play as it will ever be. Any test, bulls. We have a little bit of the upper hand if you're a bull, because we're already above the level. I don't mind what volume it tests 900 on. I don't care if it's big volume, below average volume, as long as it holds it and pulls away upside on above average volume. The test itself, I don't care what the volume is. Bears. Ideally come Monday, downside break on big volume beneath 900. Come up for a retest on lower volume. Right, I'm talking like half or less than what the volume was on the break. And then a high volume, above average volume confirmation back downside, claiming that $900 level as a rejection or more so resistance area. Implied volatility here on Thursday. It fell. Okay, implied volatility is getting lower. In comparison to the last couple of months, we're now in the lower end of that range. The lower IV goes, the more favorable conditions become to buy new contracts. That doesn't mean for those of you that are holding contracts that you purchased. I'm saying to buy new contracts. Understand, the lower IV goes, if you bought contracts, you have a leak, right? Because it's sucking Vega value out of your contracts. You might have noticed that a little bit if you're running calculations and things aren't adding up. If you're not accounting for Vega, here's your culprit. This is your problem. I solved the puzzle for you. But on the flip side, right, if we see implied volatility start to bounce and move higher, like back toward an equilibrium point, just again compared to like the last couple of months here, all of a sudden as that goes higher, if you're holding contracts that you purchased, you start to see in like an inflation, right, added on top of the delta move. That comes from Vega. When IV goes up, purchased contracts benefit at least from that one factor. Now, if you're wrong directionally, usually most of the time, unless it's a huge Vega move, it won't matter. You still have to be correct directionally, but Vega can either steal some of your profits or make your losses worse, or can make your losses a little less bad and pump up your profits. So you want to put yourself into a position where you can have Vega working for you, whether you're selling to open your contracts or buying to open them. Massively important, one of the biggest mistakes I see, and it's very silly because it's not all that difficult. Take this weekend to really learn all the Greeks, let alone Vega, which is just one of the Greeks, and you will thank yourself for the next 30 years. But lower here, heading into the weekend here on Thursday, it's fallen off a cliff lately. All right, which, you know, I wouldn't say is inherently such a bad thing. It's just a thing that's going on. Now, expected move. Let's take a look at that. The next expiration date that we have here on Nvidia isn't till next Friday. All right, that's April 5th. The expected move by the end of next week is plus or minus $42 per share. So, expected move is, you know, a technical term. We price that out from the implied volatility. It's basically, think of it as the expected volatility that the options traders are expecting. This is actually coming from the traders, right? How they're pricing in the implied volatility into the contract. So it's plus or minus $42 a share. So by the end of next week, traders are thinking Nvidia is either going to be $42 higher or $42 lower. Okay. I know when I say these things that some people are like, well, that's really helpful. It's going to go up or down. Well, okay. Well, it's the expected volatility, right? Understanding that is a massive part of positioning ourselves effectively. What's the market's expectation? Because we're playing against the market, really, when it's all said and done. And then we do the analysis, the psychological levels, the volume profile, everything else to try to come up with a directional bias. And we can do one more thing, okay, to get directional bias, or at least see what the market is seeing in terms of directional bias. That can help us, you know, at the end of the day, take all these factors into consideration and make our own decision. That's the options chain bias. If we look here, this is all just from Thursday. 1.75 million total contracts traded on Thursday, approximately. It's a good sample size. We can get some reasonably, you know, good data out of there. 1.03 million of those were calls. 714,000 were puts. Now, we can break this down one step further. The 0 to 20 delta range, if you see right here, 500,000 calls, 305,000 puts. So we're seeing a call side bias on the overall and the 0 to 20 delta range. Now, what's the 0 to 20 delta range? I got a question about this in the comment section, and I realized, you know, maybe I haven't been explaining that in depth enough in enough videos. Those are the furthest out of the money contracts, both calls and puts. Okay, it's the furthest out of the money. And those contracts, if you average it out, are going to have the shortest average expiration date. So, these are the shortest term, most aggressive bets being placed in the market. And since this is a video primarily geared toward next week, Monday, that's the time frame that I'm most interested in. So we look at the overall, which, you know, factors in all of it, call side bias there. And that 0 to 20 delta range is also seeing a call side bias here on Thursday. Remember, this is just from Thursday. We update this every single day. Every day when I cover Nvidia, we go over this. Now, listen, guys, if you find all the options data we go over here interesting and or helpful, I think you'll really enjoy Gold Plus Unusual Options activity. That's one of our membership tiers. You can get grandfathered in to that so you're immune to future price raises at the link in the pinned comment. That membership includes my daily scalp setup alerts, the personal setups that I'm looking at, you know, as they set up more so. In-play stock alerts, one of which today, you know, I alerted it hit my scanners. I alerted that, you know, it was an in-play stock. I was paying attention to it. A lot of other traders were watching it. It fit the criteria for an in-play stock to have eyeballs. It was like right above 28 bucks a share. Within 16 minutes, it was, you know, at like 34.40. Caught a couple of great trades on that stock here today. It was late in the day, actually. It was a little bit of a slow morning. You know, that Gold Plus UOA also includes swing trade setup alerts as they come, and of course, the human verified unusual options activity. You know, one tier above that, I'm also working with my platinum one-on-one members every single day. You know, listen, I want you to fully understand, you can learn to trade for free. I did it. Okay, I didn't spend a dime on, well, I suppose, information. I spent a lot to the market, my market tuition. But if you'd like to learn for free, I encourage you to do so. It's the path I went down. Because, you know, I needed all my money to trade. I didn't have the luxury of buying information. I encourage you to learn for free if that's what you choose to do. But if your goal is purely to attempt to expedite, I think, you know, something like the gold server could be incredibly helpful for you. Listen, hope you got value out of this video. If you did, subscribe to the channel on the way out. I appreciate it, and I'll see you in the next one.